Good evening and welcome back to Be Rich. After Bahrain, my team had a brainstorming session. The idea was where to do an event. So we thought we had done enough in Gulf and we'll take a switch. So the team decided to do an event in Singapore. We are going to do an event in Singapore in the last week of August. Those desirous of meeting me in Singapore can send a WhatsApp to the number given below or drop a mail. My team will be in touch with you.
Hey guys, welcome back to Be Rich. Today we're going to be talking about Germany, and specifically we're going to be talking about Martin Wolf, who's a renowned economist and someone who writes for the Financial Times quite often and other newspapers as well. He has written a piece recently called "Is Germany Once Again the Sick Man of Europe?" Germany, for those of you who don't know, has had the reputation in the past for being the sick man of Europe multiple times because of their different economic troubles which they've gone through during different phases of their history as a country. Today, we see that the label of sick man of Europe has been slapped onto them once more, and this has been done by multiple reputable organizations such as the IMF as well, which has, not in so many words, questioned whether Germany will be able to sustain an economic recovery post the Ukraine war as well as the COVID pandemic. So today, let's see what Martin Wolf has to say. So the Martin Wolf starts off talking about why Germany is being the current light it is being talked about. And to start it off, he says that, look, Germany was the only economy in the last year to shrink in the G7. That's a big deal. And he says that the GDP per head, that is GDP per capita, has shrunk by close to 1% from 2019 to 2023. So you've had a period of 5 years and your GDP per capita has shrunk during that period. And that's not a good sign because an economy is supposed to be moving forward, at least according to growth economists. And today we're seeing that Germany is sliding back, at least on a per capita basis, which is alarming and concerning, which is why we're seeing Germany being pushed into the topic of recessions and economic turmoil as of late. And this is in contrast with the US, which over the same period has gone up by over 6%. That's a huge gain. And the US seems to be in a league of its own compared to Germany, which today seems to be hobbling along. And now Martin Wolf goes on to examine whether things are now going to look up for Germany in the future. And as of today, Martin Wolf says that yes, there are some positive signs to look at. One, we see that Germany's terms of trade, which is the price of its own exports versus the price of what it's importing, and the ratio between this, we see that Germany's terms of trade deteriorated during the Ukraine war because the price of energy spiked because oil became more expensive and piped gas became more expensive because it came through Russia and they were boycotting Russia. So energy prices soared, and today energy prices have sort of mellowed out, and which is why we're seeing that Martin Wolf says that because their terms of trade has improved, this is a positive sign for the German economy, especially because the interest rate is now going to come down or has come down because energy prices have come down, which means that the European Central Bank can take a more dovish position in its monetary policy making. It can go a little easier on the economy. Because of high inflation due to high energy costs, it was uncomfortable for the European Central Bank to comfortably cut rates and engage in loose monetary policy. But now that the inflation rate seems to be coming down, we can expect the ECB to take a more benign stance. Secondly, Martin Wolf acknowledges that yes, what are the prospects of the long-term economy in Germany? And he says that the danger to these long-term prospects have been over-exaggerated. So he says that yes, it is true that the energy-intensive industries have seen a degrowth over the past few years and even a steady decline. However, he says that this industry is only 4% of the German economy, which is probably a few drops in a bucket in terms of how it's going to steer the course of the German economy. Yes, we can't see any gains from that area, but losses we see in that area will not affect the German economy as much as people think it will. And he says You only need to look at the automobile production sector for you to see that the long-term prospects of German economic growth do not seem so bad. Because he says that, look, automobile production rose 11% in 2023, and electric vehicle exports have risen by 60% in 2023. And all these numbers show that there is hope to be had for long-term prospects for the German economy. And he has also highlighted an important point, which is that the manufacturing value add, which is how much monetary value addition is occurring in a certain product, has remained quite steady in Germany, regardless of the actual industrial output being much lower. So what this basically says is Germany is now engaging in higher value addition exports rather than low value add products, which is always good for an economy. And he looks at forecasts and he says that, look, Germany is going to see, that is the current year, Germany is going to see a 0.5% increase in their economy, which doesn't seem like much. And he says in the next year, we could expect a 1.1% increase according to forecasts. And he says that this is not that great of a sign. However, it is a positive number, which is to be celebrated. Now, this video isn't all flowers and dancing, but rather there is some news to also talk about, which is that Germany is suffering. And he talks about these reasons of why Germany is going to suffer in the future unless they're able to curb these issues. And he lists 5 main points. First point, Germany's labor force is shrinking. It's going to fall further in the upcoming years, but it has fallen by 0.66% in the past. And it's forecasted to fall by a further 0.66% between 2025 and 2029. This is troubling news because the factors of production in Germany and any other economy include land, labor, and capital. And labor is one of the crucial factors of production, and Germany is seeing the labor force decline, which means there are more dependents in the economy than those who are willing to, or rather able to, take care of these dependents. So secondly, the share of gross public investment, the percentage of GDP, is very low. It's even below their very troubled cousin, the United Kingdom, which is now standing at 3% of GDP in terms of public investment. And Germany today is standing at a low number of 2.5%. This is very low for a European country, let alone one which is supposed to be leading the European Union. Thirdly, the share of Germany's GDP as a percentage of GDP per head, as a percentage of the US's GDP per head, is at a low. In 2017, Germany's GDP per head was 89% of the US's GDP per head. But today we see that it stands at 80%. It has declined by 9%. Moreover, Germany continues to play an insignificant role in the digital economy. And this is a big problem because they aren't able to cash in on the gains to be made from services. So Germany is still stuck in their production state of affairs where their main exports are manufacturing rather than services. And we're seeing that a developed economy of this size needs to diversify into services, especially the digital economy, because they don't have as many people to work anymore. So the number of dependents have increased, which indicates that the economy has to traverse into a place where they don't need to depend on their labor force as much anymore. But this is going to be a tough challenge which Germany has to overcome for it to continue to have good long-term prospects in the future. And finally, he says that Germany is trade dependent because Germany is a main exporter. It has a positive current balance, and the world is fragmenting as we know it because more and more countries are willing to become autarkical, where they basically decide to be in their own closed, isolated units rather than a globalized center where everyone trades with everyone. So that is not a good sign for Germany, which is a net exporter rather than an importer. And these are 5 reasons why Germany will be facing headwinds down the road in the next couple of years. What do you think about